Hello and welcome back to Building Wealth on the Go, a podcast by KLT Wealth Management. I'm your host, Brad Wilson, joined by my colleague, Joe Filiameni, and today we're missing Courtney Beach, but that's okay. She'll be back for the next episode. So it's just Joe and I running the show today, but we are back with Season 5, Episode 7 of our podcast. Thanks so much for tuning in. Let's do a little bit of a recap. What happened during the summer from a market and economic standpoint. And what has led us to the point we're at today.
Yeah, busy summer. I think we talked about it in the spring here, where the typical idea from the investor is sell in May and go away. And it wasn't the case this year. It was a fairly, from a market point of view, interesting market. We had a nice sort of uptrend in the market, bit of a pullback in the May. Looking at the S&P 500, bit of a pullback, but then steady growth afterwards. So yeah, lots on the go that happened. We talk about sort of the volatility, and I don't know whether volatility is the right word for what's happened up until now. Is it really volatile, or is it just, when we talk volatility, we're talking like swings up and swings down. And maybe on a particular day, we've seen that even just recently, where the markets, we look at the markets, midway and it's up and then it closes negative. So definitely some like short-term volatility. But if you looked at sort of a graph of one, like I'm looking at the S&P 500, and if you kind of look at over the year, we do have a steady growth. We had some pullback, and then it continued to grow forward. And one of the things on the technical side is what's called rising bottoms, essentially. So the bottoms, the drops that we see, they seem to be always on the upper scale. So when you have that sort of feature, then it potentially could signal continued growth into the markets.
Yeah, it's interesting because we had like relatively steady year. There were obviously the volatility like you mentioned, but it really was kind of August through to, yesterday, where we saw the markets pulled back anywhere from 8 to 13%, which is a pretty significant kind of correction there at the beginning of August. We saw markets rebound back up and then saw a little bit more of a pullback. And then up until yesterday, market, in the last little week, and so markets have shot back up. We had S&P hitting another all-time high yesterday. But it's interesting to kind of see how it's playing out because you had the different indexes. You've got the NASDAQ, the tech-heavy NASDAQ, running so hot to start the year, and it fell a lot further than the S&P did, and still hasn't rebounded. It's still about 3.5-4% off its all-time high from middle of July. So, whereas the S&P, again, has just hit a new all-time high. So, shows you a little bit of discrepancy that there's a bit of rotation going on in the markets, that you're still, you still have your big names that have done really well this year, but you're not seeing them power through these rebounds as strongly as some of the other names on a broader spectrum, your companies that are not to that degree of size, and also some other industries, financials. You look at the Canadian economy has been really strong recently as well in the Canadian markets. The S&P TSX, the TSX index up significantly too recently. So you're seeing a little bit more of a diversification and broadening out through this recent rally that we've seen.
Yeah, it was interesting when we did get that pullback, especially on the NASDAQ. Of course, it did pull back the S&P 500 as well. And it just almost in our mind, we're saying, okay, well, this is it. The tech bubble is bursting at this stage of the game. But a lot of analysis has been done on, in comparison to this as a bubble compared to the year 2000, 1999, 2000, when I started in this industry. So a lot of comparison. And really the gist of everything is that these tech companies are actually making money. And that's where the difference was, that tech bubble that we had in 2000, 1999, 2000, that was buying into air because, for us older people, we would remember the start of the internet, and so we were buying into these companies on this thing called internet and stuff, and you're basically buying airspace, and there was no underlying profits there of these companies, right? And that's where the valuations went too high, people got excited, and then people realized, hey, we're just buying air, there's no profits here, and then it came crashing down. Totally different situation here. We're seeing these companies, they're reporting their profits, and they're making money one way or another. So it's a totally different situation, but interesting how they compare that.
And I think it's important, like on that valuation standpoint, like we're sitting at a pretty strongly valued index right now. You look at the S&P 500, it's got a price to equity ratio of about $30 or about 30. And so that we haven't seen those numbers since the 2020 surge in the markets, or sorry, 2021 surge in the markets. It was about March 2021, the last time we saw those numbers. So there is some hefty price being paid if you're going to own one of these stocks right now. So there still is a lofty valuation. And so whether or not that eventually does get trimmed down, we'll have to wait and see, with what the future holds. And there's a lot of other variables on the table. But that is one headwind for the markets and the rallies that we've seen, is that they're already pretty strongly priced right now. There isn't a ton of price appreciation room that makes sense from your historical averages and your norms and what historically people have been willing to pay for set valuations. So that's definitely something to watch.
Yeah, and then you run across the FOMO, the fear of missing out, and I think that's what continues to drive those prices higher and stuff. So I think a lot of portfolio managers are much more cautious on some of the big names that are out there, NVIDIA being one, and but if there is a pullback in NVIDIA, it seems like they try to scoop that up. The question is, what is the true valuation of that company? And is this more of a normal thing moving forward? And it's going to be hard to tell moving forward anyways. But I guess in the backdrop of everything is what's happening to the central banks. And we just had the U.S. Fed cut their interest rates 50 basis points, which was pretty much expected by the market. I think it was like 80% for sure that was going to happen, and look what happened to the markets, right? They loved that. They says, okay, that's great. Interest rates are down. For businesses, that's great because businesses borrow money. So then, if borrowing costs are lower, they can grow, and that business will grow, and there's more valuation. So the unit value of the business goes up. So that's how it all works. And so then there's a trickle-down effect, obviously, when interest rates are adjusted, and why they actually adjusted them. So I don't know if you want to chat a little bit about that, Brian.
I think, like it was a consensus, and this was just 2 days ago, right? Like it was a consensus they were going to cut rates. It was just a matter of how much. And then when they came out swinging with the big 50 basis points, Canada's been sitting here the last 4 months cutting at 25 basis points for each rate meeting, and they've done that 3 times this year, and the U.S. just slashed at 50 basis points in one meeting. And I think a lot of people, not only was it the rate cut, but it was the tone and the outlook that Jerome Powell talked about with their plan and their target for rate cuts. I listened to his speech earlier this week, and he pretty much said that they anticipate cutting quicker and stronger than they had previously because they feel the economy's on the right track, and this is the right time to start doing that. So people got really, really optimistic, and I think that's what led to the strong market rally we saw yesterday of those big names boosting up, is that, hey, like we're turning the corner, and if we are entering into a recession at some point in time, it's going to be a really, really soft landing, and there's not going to be very many headwinds there. So that was the positive, jumpy news that everybody ran with yesterday, post and Fed announcement there on Wednesday. So it'll be interesting to kind of see what the trickle down effect is from that, because you've got Canada's Bank of Canada is going to meet in October, about mid to end of October this time around. And does that give them the green light to cut by 50 basis points? Or are they going to stay along with their trajectory of sort of how they're trimming rates? I think the numbers look better, right? When you look at inflation, Canada's inflation's at about 2.2%. The U.S. is in a similar boat. But and then the jobless claims, right? The U.S. jobless claims, that was one of the other factors that came in. So the labor market's still relatively strong, with inflation staying at a comfortable rate. So all those factors kind of tick all the boxes that make everyone so excited about where the economy's heading, right?
I read an interesting article that kind of talked about sort of on the Canada side in terms of what they might do in October. And it kind of made sense a little bit in that even though that Canada has been dropping their rates and, 75 basis points here to date, and you're thinking, oh, okay, that's good. But inflation has been going down too. So then the real rate of interest, when you factor inflation, hasn't really changed. And so then this analyst basically said, I think the Bank of Canada really needs to up their game and definitely do a 50% and possibly even a 1-point drop just to kind of keep up, because of course inflation is under control. Now, okay, so we can always debate this. Inflation, right? I'm going to the grocery store. I'm still paying a lot of money, although the price of lettuce has gone down, which is great and stuff. And even the price of gas has gone down a bit, most recently. So we are sort of seeing that. I think where they always exclude the number in the inflation is the housing costs, right? Is your housing cost. And they always sort of exclude that. But this certainly is interesting to see whether the Bank of Canada does that. And I think that's going to really be the saving grace for a lot of consumers out there that are looking to renew their mortgages. Because again, I think we talked about it before, the mortgage situation in the U.S. is totally different than the one in Canada. And I think us here in Canada, we're going to suffer more with higher interest rates if we're sitting with a mortgage and we need to renew it. So it would be interesting, and hopefully they look at that. Of course, they don't want sort of inflation to jump up, but if we get a softening in the job market, and we seem to be getting that in Canada, they say that 14% is the youth unemployment rate, so it's on the rise too. So, as much as unemployment's not good, it is good in that it helps us sort of maintain sort of a steady level of inflation and growth. So interesting times.
Yeah, I think the numbers too coming out from the summer was that Canadians were spending a little bit more money. So retail sales numbers were up for both July and August. So that shows that the economy is still being a little resilient, that people are still spending money. So it'll be interesting to see how that factors into the rate decision come October here. But yeah, so lots to kind of keep our eye on as we move forward. We'll definitely touch on that in our podcasts remaining for the rest of the year. But let's dive into the little topic of the U.S. election.
Yeah, and through the summer, we had a little switcheroo there, bait and switch there. Interesting how, Biden was in the race. So when we started this summer, right? And then all of a sudden... and I don't know, was it planned or was it not planned? I don't know. You kind of theorize about things like this and you're thinking maybe, this was all part of it just to kind of catch Donald Trump off guard and his team. But yeah, so Harris is now in the race and seems to have a very, very strong following. Let's put it that way in terms of, support. In the U.S. I watched them on their debate. She's she's always been very well spoken. Let's put it that way. But yeah, now it's going to be a bit more closer race. I would think. I think Trump still has a lot of support in the U.S. and people like just really geared to that, and they would stick with him regardless of what he's actually saying. And but it's going to be an interesting race, and we're not too far off here. November 2nd, I think it is.
5th, I think. Yeah. By the time this podcast
5th.
comes out, we're going to be like a month away, which is hard to believe. I know they've already started mail-in voting and whatnot, but yeah, it's interesting to kind of see, how will that impact both Canadian and U.S. markets? How will that impact the economy? Obviously, both have pretty significantly different stances when it comes to taxation, to injecting or corporations, how they deal with corporations. They're feeling even in alternatives. You see, Donald Trump was he buying a pizza with Bitcoin the other day or something? He at a restaurant, so you're seeing like very different stances on a lot of different things, and very strong support from certain corporations. Elon Musk is riding Donald Trump's coattails as hard as he can right now. But then counter to that, you've got lots of other people really supporting Harris as well. So it'll be interesting to see how it plays out. And that's the different thing with like that two-party system, right? Is it's one or the other. Here, in Canada, there's a lot more flexibility from that standpoint, that party standpoint. You often see a lot of parties working together more often than not, like right now with a minority government. But in the States, it's one or the other, and whoever gets the majority, right? So
yeah, it's it's going to be interesting. They have some similar sort of ideas, although if you go online, you see Trump's sort of listing of things, cut taxes here and help people here, help people there. There's really, and I think this is typical of most political parties, there's not a lot of meat there, right? They can say a lot of things, but yeah, exactly. And even on Harris' side, there's not a lot of meat there. These are become those political promises that they're going to make. But Trump is still very hard on the protectionism aspect, immigration, and I get that. Illegal immigration, I get that totally. And that seems to be a problem in the U.S. We don't necessarily have a lot of problem with that in Canada, but that illegal immigration. But immigration in general, it seems like he's kind of dead set against as well. So that would be very, very interesting, because then where are people going to immigrate? Are they coming into Canada? We're already bringing in a lot of immigration here, and that's impacting our economy significantly, especially on the housing side of things. So, if he gets in and he tightens things up even more, is that going to sort of impact us negatively on that? Harris is all about, the immigration as well. But again, the legal one, she's not so much in trying to close her borders. To me, she seems to be more friendly in terms of being able to work with Canada, with Europe, Mexico, things like that. Whereas Trump is much more closed in, complaining that immigration takes away their jobs,
yeah.
right?
He was even complaining about immigration from Canada at one point as well. He was talking about people immigrating from Canada, and he wanted to stop that. So
yeah. So there is always that fine line, like in that, as a country, obviously you want good international relationships, right? And there's a give and take where that, okay, this is going to impact my economy, but I'm getting something else that's going to help my economy. So it's a bit of a fine line in terms of the political spectrum.
Yeah,
and
given the U.S. is such a powerful country, and we rely heavily and are impacted directly just based on proximity and our dependency on them. Whoever gets in will have an impact on us one way or another. It's just a matter of which direction. Is it a positive or negative impact, and to what degree, right? So a couple interesting.
The bigger question is who's gonna be at the helm in Canada.
Oh,
right?
That's true too.
Like,
yeah.
I think they've moved Trudeau's chair closer to the door, right? Because I think he's on his way out. And I think that they did a confidence vote, but I think the NDP did support him on
the
that.
NDP and the Bloc did support
last minute.
It seems as though he's going to stick around. I doubt we'll see an election in Canada until his term is up next fall. I think it's October next year is when the term's up. I doubt we'll see one. I just think that the other parties need to prepare as long as possible to try and take as many seats as they can. Aside from the Conservatives, I know the Conservatives want to have an election today because I think they know that they're ahead. But I think you look at the NDP and the Bloc and they want to swoop up a lot of those Liberal seats. So I think they're building out their plan so that they can do that. So I think that's why they're still supporting the government and not, in a confidence vote. But yeah, come, this time next year, we'll be talking potentially of a new Canadian election, right? So, will be interesting to see. But I did want to know just sort of on the U.S. election about the market impact on the stock market. So historically speaking, markets have struggled within the sort of 6 months post-election. Within the first month, the average is down about 2% in the markets, and the 6 month is down about 3% on the average post-election. And one interesting stat I found as well is that in the 12 months after an election, U.S. election, 54% of the time it has overlapped with a U.S. recession. So more than half the time after an election, you've encountered a recession. So I found that very interesting. That was the case and whatnot. So we'll be interesting to kind of see what happens, because when sort of Biden inherited the presidency end of 2020 into 2021, we were kind of out of that, so it wasn't quite that overlap of the recession because we went into really, really strong conditions post the initial interaction or hit of COVID, or whatever you want to call it. So there is that possibility that is what occurs, and then again, it's just what degree do we encounter that?
Yeah, and I think the viewers and the listeners should kind of keep in mind, like when we say recession, right? A recession impacts everybody differently, and there will be certain industries more impacted than others. And it's quite often we're in a recession and we don't realize that that's the case. So, again, it's not something like, to panic over. Again, work with your financial planner and make sure you're doing what you need to do, essentially. But it's not necessarily something that you need to panic over, because sometimes you don't feel the impact at all.
Yeah, no, exactly. So that'll kind of lead us into wrapping up the podcast with Joe, your tip of the month for September here.
Yeah, well, for September, kids are heading back to school. It all reminds me when I used to put the kids on the bus there when they were going to grade school, and then, of course, later on in the years, dropping them off at the universities as well and stuff. So that kind of prompts the idea of registered education savings plan. And honestly, I think that that's the most unused sort of a vehicle that parents can use today in order to help further the education for their children. And an RESP plan here in Canada, you get 20% grant money towards whatever you put in as a contribution. I suggest that you start them early. Start with $50 a month. If you can't find $50 a month in your budget, then you need to talk to somebody, because you need to kind of relook at your budget. So look into that. It's a time of year. It's always good to kind of think about that and get those RESPs started, even for a small amount.
Mm-hmm. Yeah, no, absolutely. It's a great idea and a great tip, especially as I know kids who are entering grade 12 right now will be looking to apply to university here come the end of this year as well. So it's always a busy time come the fall for kids of all ages in school. So that kind of wraps up our podcast today, September 20th, 2024, our episode 7 of season 5. We will be back with a few more podcasts for the rest of this year. And we'll have lots to talk about. Maybe not so much next one, but definitely the podcast post U.S. election. There'll be lots to dissect as to what went on. But even then, there's still lots of news and lots permeating here over the next month that we will dive into in October. So thanks again for tuning in, listening, and watching, and we will be back next month.